Hello everyone and welcome to this video. In this one we're going to talk about the euro dollar and the news that just came out in the US, which is the CPI data down to 7.1%. There's lots we can talk about, and there's many ways which you can decide how you're going to trade the reaction. Remember, we're not guessing what's going to happen in the market. That's not the goal here. Okay, we want to trade in stages. We want to trade the reaction of the news. And really the title of today is going to reflect that. So it's going to be more or less what I think about euro dollar. Heavily interested in the dollar, especially because this is going to weigh around all pairs and they'll have similar movement. But where you find yourself now and what to really do with it and how to manage the data and news that just came out. So I've just traded it on my broker account, but now I'm going to take a minute to do a film and then get back to what I was doing. So the monthly, of course, we spoke about this a million times. I think everyone's clear on this. We're just ramming into key resistance. I did say on several analysis that I don't think we're done. We're going to push even further in. And the reason why is reflected even in the latest news that just came out. Okay, the dollar is weakened from it and the euro is coming up. Okay, and that's because people are pulling out the dollar based on that drop in the consumer price index. There's lots of changes in the way people think about hikes from the Fed Reserve, and that impacts their trading, especially on currencies. So the dollar's been weakened, the euro's coming up. Now, before that news came out, okay, about half an hour, 33 minutes ago it came out, but before that, you shouldn't have been sitting on your hourly chart thinking, okay, well, I'm going to guess what's going to happen now, because there would have been a million traders who looked here and said, you know what, I'm going to short sell this because I think the CPI is going to do this or that. Okay, so the keywords here are we'll put it in quotes, I think. And of course, when one thinks, they do not always know. Okay, so this was for you. If you bought it, great, you closed out and perhaps it was a gamble and you made money on this occasion. Okay, on this occasion. But if you zoom out a little on your higher time frames, look how high the price is. And look at all this room down here. Okay. Now, as I say, if you did buy, yeah, sure, you might have been right on your think basis. But over the course of time, you'll find that doesn't work as a strategy. You cannot afford to just gamble when you know news is coming out, because a lot of times it won't happen like this. And also, if you don't kill it, which I suggest you do, if you were long, get out of this now. Okay, because usually after these big impulsive moves, you get a preceding fall as people exit their positions, like you should be with them. You know, you don't want to miss that. You don't want to miss the gains you've now got on the table. But the point is, we're not gambling for this. You are now going to look to the short side because, as I say, people are going to liquidate their longs like you might, and you can flip over and look for the fall. Now, the reason why you do that as well is because if you zoom out, you can see that we're running into areas that are going to be deemed key resistance. Okay, I wouldn't be surprised if the price does rally up to 107.4. Whether it will do that immediately, I don't know, which is why I would take the longs off now, kill it, and then just long it on a fall lightly if you get to that 105 area. As I say, I do think it's going to go higher, but I don't think it's going to do it in one straight line. I think it's going to pull back. So I would exit those anyway. I mean, even if it doesn't, you've still taken gains. You've got money, you haven't left it on the table, and it's gone in your pocket. That's the important thing, okay? You've got that market reaction, and you're looking to pocket those gains. You don't want to leave them on the table, okay? Because if this does pull back, you're either going to get significantly less, or you're just going to completely miss the move. So that's the point of that. So where are we now after that news? Well, because the sentiment on the dollar is so strong for it to be weak, that is why I said I don't think this is going to stop rallying. Okay, and that's why you've got this. I mean, we had a little break here, and that's when I said, look, the price is not falling far away, and you could have inferred this, guys. I mean, this is really what I was talking about. If you look at these falls all the way along, you can see that they're not very far. And that should tell you that price is rejected immediately and there's strong impetus to the long side for the euro. Now, that doesn't mean you need to buy every single time. You could, and I would suggest doing it only lightly because you've got a larger move to the downside. But those are small dips you could have traded for hedge gains or just for standard normal profits, okay, if you didn't have any losing positions previously. But what you now have is that move continuing up. So that's how you would have known that that was going to happen. In brief terms, I would say it's not going to be like that every time, but that's a good indication. And now you can start, especially for risk-averse traders, looking short as we rise up. Because once you get to this level, you're going to hit key resistance, and you're also going to have a fib or a market value measurement, if you like. You're not quite at 50, but you're past 38.2. Now, you know, lots of people say, okay, well, once we hit the magic line, and I did this in a live stream. If you haven't seen that, go and check it out. It was a Trading View show. You know, it blows right through, and it comes through this 38.2 line. Okay, now you shouldn't have been expecting it to pull away far there, as if by magic, because it's an early fib level, and on top of that, the market sentiment is strong for the dollar to be weak, and that's why you push right through it. Now, that doesn't look like it's going to end immediately, and that's why I think you'll get a bit more room and you'll get halfway between these two. If you're mega risk averse and you're looking for a short zone, okay, you could let price run even further to this level here. And at that point, you probably reach these moving averages, and this is good for those guys who are risk averse, perhaps newer to trading. That's probably going to be an ideal short zone because price is going to start to get exhausted at that point. You're going to see your stochastic oscillator move up on lower time frames towards that level. So trading it at the moment, I would kill off those longs. There's a little bit in the way, but I think generally you are going to pull up to this point, okay, eventually. I think you will get there. You can take it lightly short of that point, but nothing major, and you're probably looking for early exits at that point as well. Risk-averse position remains higher up because you're letting that market run further and you're gaining more and more value on your trade. Because the price is higher, by nature, the value of your trade increases. It's the same as if you were selling anything. If you sell it for more or a higher price that you desire, generally you're going to get better value for it. That's fact. And there's no two ways about that, more or less. So you can look to exit those longs now. You could even exit half your longs now and half slightly higher up at 107.4. That could also work as well. Or you could have an in-the-money stop, so you're letting the market move up. If you are going to look long, again, it's going to have to be light, and it's probably going to be around here, okay? Eventually, euro-dollar will pull back larger. That's inevitable as it rises, but you're now above these moving averages, so you are more or less quite close to them. But this is going to remain as a minor support or an early minor support, and therefore your risk needs to match that. You don't want to load in. If you're, again, risk averse, you would probably be looking a bit further down, and you'd get something like this. Okay, that would be ideal for longs. And if you do get absolutely splattered, which is relatively unlikely given the market sentiment, you could look lightly long down here. So in a nutshell, I think you probably go a little bit higher. Okay, if you do pull back, you can get a light long at that point. So thanks for watching, guys. I hope that really helps. As always, check the description. You can get my free training, everything like that. If you want to get me on Facebook, Discord, whatever you want, you can chat with me or whatnot. But just watch your Euro trades as this date has come out. The market may get some reactions, and there's news later on as well. That may twist things a bit. So you always want to be monitoring what's going on, because sometimes that news can be very prolific. You can have statements that come out of the blue as well. So that's it. Don't trade news when it happens. Trade it after it happens and go with the market reaction like you've got here. Thanks for watching, guys. Hope that helps, and I'll see you in the next one.